Hello, I'm Joe T. Gay, portfolio manager, Equity Armor Investments. Do you remember the TV show Lost, where every episode had ended with a question and it was always answered, but the answer would reveal three new questions? Well, that's exactly what's happening in the market right now. And just like in the TV show, it's going on a little bit longer than we expected. And there's a risk that this could end badly. Now, for months, the stock market's been climbing a wall of worry, trade wars, budget battles, inflation concerns, Fed uncertainty. Each problem seemed to get solved only to create a new challenge lying underneath. And here's where it's getting interesting. So Lost was supposed to last 3 or maybe 4 seasons, but the show was just too wildly popular. What happened was the networks came and they said, hey, make this show longer. It ended up lasting like 7 seasons, but the plot got ridiculously thin. There were twists going on that no one really had planned for. And that's starting to seem like what's going on with the market. Our current bull market has extended way beyond what the fundamentals would support. Instead of solid earnings growth, we're getting a lot of hot air, just speculation, future potential. So we'll be just watching this closely because remember what happened to Lost. All of this extra air caught up with it. Viewers decided, hey, this isn't even very interesting anymore. What is going on with this show? They just kept on having to like stretch it out. So that's when the fans disappeared, and they had to really end it faster than they thought they wanted to at that point. So they were forced to extend it longer. Then they were forced to cut it short faster than it was supposed to go. So that's what it seems like is going on in the market. It's going to go on longer than we expected. When it ends, it's going to be very abrupt. So recently, we've seen jobs data start to get a little bit softer. Inflation has been a little bit stickier than we have been hoping for. And we're seeing corporate earnings. They've been decent, but they've not been spectacular. And we have this really hot air. What we're going to need after we get through this run of speculation, after we get through this stretch of catalysts, what we're going to need is continued earnings growth and continue showing that, hey, this growth is just continuing quarter after quarter. We'll just see if that's going to play out, or else it's going to end, unfortunately, like we all remember how Lost ended. So anyways, it's been it's been a bit of my intro here. Glad to have everybody with me. Really excited. Again, great show. Stick around to the end. I got a trade of the week coming up. Make sure you'll stick around for that. But as usual, former VIX market maker, I'm going to be starting where my heart is with volatility. We've seen, the VIX all over the map. Recently, VIX has been very low, as you know. We've been talking for some time. September is a volatile month. That is when people get back to work. Kids are done with vacation. And everything's moving forward to the fourth quarter. So we're watching this very closely. It's starting to tick up, of course. So will we see a new arrow coming in here soon? These things are never very predictable. I suspect we will get a new arrow soon, but I can't really exactly say when or what it will be. The MOVE Index is another thing we're watching very closely. Of course, big news with Fed this week. We're going to have Jackson Hole. They often signal what's going to happen in September at Jackson Hole. So, and September, of course, is a big time for the Fed to move. We've seen that historically. So we'll be watching this very closely. 2 weeks ago, we laid out how the MOVE Index is very correlated to PE ratios. The lower the volatility in the bond indexes, in the bonds, the lower volatility in the bonds, the more liquidity there is in the system. The more liquidity there is in the system, the higher PE ratios tend to be. If this volatility picks up in a meaningful way, we'll see those PE ratios come down in a meaningful way. So it's something to keep in mind, something to be careful for. Speaking of which, we have the SKEW index. Remember, it's something I like to watch very closely. The SKEW index has measures the 25 delta put versus the 25 delta call in the S&P 500 1 month out. This is just a sign of either complacency or exuberance, kind of ticking up here. People a little bit more concerned than they were a couple of weeks ago. Interesting to see, we kind of hit that lower trend line. Are we going to go all the way back up to this upper trend line in this area here, 7.5-ish area? we'll wait and see. No guarantees. Obviously, it's gonna be crucial to see. Definitely seems like if we get something seems at this area, we probably would be continuing higher. We're just watching. There's nothing set in stone here. This is certainly an area of big risk. If we get above here, something is going meaningfully different. Something's meaningfully changed. If we're trading in this range here, yeah, we're just kind of in the same system we've been in for a while, back and forth here. But anyways, looks like we probably will get up to this area. And then the test, of course, is to make a new relative high. With the futures, this is obviously it's a very interesting chart, but remember we have settlement for the August future coming in on Wednesday here, so Wednesday morning. So this obviously makes sense why it is flat here now just a week ago. It's interesting, that was kind of steep, and you have the VIX higher and this future lower. It's just another reason to remember, hey, you may think you know which way volatility is going. That doesn't mean the futures are going to go the way you want it to go. It always pays to trust somebody that has seen this before and kind of understands how these systems work. Interesting to see. Yeah, this was 2 months ago here where you had the same thing going on here, but kind of steep still. If you're looking at September to where the spot is, it's a pretty steep spot there. People are still pricing in some volatility for September. We'll see what it looks like on Thursday morning or Wednesday afternoon when this becomes a front month. Of course, if this changes or people are still pricing that in, but people are definitely pricing in some volatility for September and October. They're not alone in doing so. I guess that's kind of where the crowd is right now. Like I said, Jackson Hole is coming up. Really exciting time for policymakers, people who are interested in that sort of thing. We're going to get some statements from Powell. We're going to see where he's really at. I think the market will really have a set in stone. I think there's not going to be a change. There's going to be a cut in September. I think we're going to find out how aggressive the Fed's going to be cutting after September in Jackson Hole. Are they going to say, hey, we're going to cut until we can't anymore, or are we going to do one and done? I think we're going to be getting a little bit more answers on how quickly we're going to cut or how many cuts there are going to be. Market's pricing in some pretty aggressive cuts right now, so there could be a chance for a big shakeup, or I think the market could be surprised one way or the other. Big story right now. I think a lot of people are really keyed in on this at this very moment. We're expecting this to happen any minute now. Actually, Zelensky and Trump and other European leaders will be getting together. This is very fascinating. I think the market's kind of maybe discounting any immediate action, but certainly the potential for a deal in the coming weeks is on the table. A potential for really good news for supply chains freeing up, oil coming even lower. Something the market's watching out for. A deal would be absolutely welcome. And as I mentioned, we're watching interest rates in the MOVE index and bond volatility. Elsewhere, we also have PMI on Thursday and some earnings coming out here. Some more retail earnings, which should be interesting. Got a trade at the end of the show. Make sure you stick around for a consumer discretionary name. It'll be coming up soon. Don't worry. And let's go through the charts for the week. We got the S&P 500. Just kind of pulling back a little bit here after a tremendous run lately. Not the biggest pullback yet, but something we're watching very closely. Kind of a big move here down to where the 50-day moving average is, but it kind of makes sense. We're seeing a little bit more of a pullback in the NASDAQ as we're seeing like a moderate rotation. We saw obviously tremendous growth from the momentum names, the AI names since April. So seeing a very modest rotation, kind of taking a look here at the semiconductors and the Mag 7. But the Mag 7 is really not even blinking here, pulling back hardly at all. Seeing some names like Palantir, maybe 173 right now, at a high of 188. So that's kind of pulled back. But yeah, pretty calm here for the Mag 7, not really pulling back as much. But there has been a little bit of rotation, but there's a long way to go. People are talking about how poorly the IWM has done versus the S&P 500. Well, yeah, look going back to around the COVID times, like we're just absolutely getting, we have come back in a big way in the this is value. Value has come back in a big way. Here's IVE. Oh boy. IVE. Value has come back in a big way here versus the S&P 500. S&P 500 has been doing fantastic. And is it overdone? I don't know. We'll see. We'll see if in time, but it really looks like we're definitely still in this trend line. Nothing really has changed here, but something to watch as we go. I'm kind of more watching like growth versus the S&P 500. So yeah, I mean, we are close to where we were last year here for growth. So maybe it could be time for a little bit of pullback, but again, we haven't really seen anything major yet here. Nothing has significantly changed at the moment. Just something to be watching out for. Watching for a little bit of rotation. Is the momentum kind of fizzling out? Obviously, if you saw the intro here, I'm kind of speculating at some point the momentum will fizzle out. The question is at what point and how long? And there's no reason to think that it's going to happen next quarter or even next year, but it will eventually happen where this momentum has to catch up with itself, and the gains cannot continue to be so fantastic for so long without having any pullback. So, and I think it's been fascinating to see every pullback has been bought lately. So there still is a very large appetite for this stock market, and yeah, it makes a lot of sense to see so. But given all that, given my concerns with the market, my concerns with where we are in the economic cycle, given that all the catalysts have come and gone, I'm kind of looking out for areas of the market, maybe showing some signs of weakness, and maybe looking to get some protection to my overall portfolio and going against that weakness. I'm actually looking at some consumer discretionary names. I'm going to zero in here on Tapestry. Now, this is a company, great long-term growth. It's formerly Coach. So it's kind of like high-end luxury items. And it's just kind of a sign of the economy that, hey, really bad quarter, talking about tariffs and supply chain concerns. I think it's kind of more of a worse sign that people just aren't interested in these really high expensive items that just kind of status symbols right now. So I'm kind of fading this name and fading this area of the market right now. I think that's kind of where I'm at, where in terms of like the overall economy is right now. Maybe things are okay, but we don't need to buy an extra handbag or an extra coat or an extra pair of shoes while everything is going on. So yeah, just watching this really bad earnings. I think the market will fade this if there is weakness elsewhere. Kind of targeting this 90 area, of course, but I'm going to be looking at this 50-day moving average around September. Going to buy this 98 put right there, kind of targeting that. So that's the thought process. Here's the trade. I'm going to look at the September 19th put. September 19th expiration. The 98 put right now is about 350 this morning. So that's the trade of the week. That's what I'm looking at. Let me know what you think. If you agree with any of that, if you think I'm crazy, happy to discuss that. But that's just my 2 cents, and I'm putting it out there for the world to see. Anyways, I hope you have a good week. We'll be back next week, same time at this 12 Eastern time. Really happy to be here, and I hope you guys like it. I'm Joe Tigay for Equity Armor Investments.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.